Bloomberg Audio Studios. Podcasts, radio, news.
Joining us from the White House is the National Economic Council Director, Kevin Hassett. Kevin, welcome to the program, sir. It's good to catch up with you once again.
Sure. It's great to be back.
I want to say, first of all, Kevin, congratulations on the new seat. You know the NEC has a storied history going back to the 90s, including Bob Rubin and Glenn Hubbard. I know you know all of that. I just want to take a step back, get away from the numbers we've got in front of us just now, and think about the last few years. What kind of labour market are you and the team inheriting?
Oh, you know, I first also want to say thank you. It's great to be back at Bloomberg, and thank you for the congratulations. And you're right. If you look at the people who've been, in the office I am in now, like even Lael Brainerd before, I'm kind of humbled to be there. I also want to say thanks for leading off with Mike McKee. I've been watching him do jobs stuff for like 20 years, and I always want to hear what he has to say. And sure, he had a couple things in there that I hadn't noticed in, in the release, and so that's great too to be back. I would say that the big headline for me is something that you guys haven't talked about yet, but I'd encourage you to, is that we've got this thing going on where the professionals at the BLS keep revising down the data. And so the headline for me when I'm looking at this is that it was the biggest downward revision. The benchmark goes through last March, the biggest downward revision since 2009. And we're still sifting through the numbers, but it's really, really big. Could be as much as, if you go a little bit beyond the month, the last month, it could be as much as 1 million jobs fewer than we thought after this benchmark revision. And so the thing is that why is it that we keep seeing sort of positive jobs numbers, and then when we look back a year later, it's way worse than we thought? And so I say that what we learned with all these downward revisions is that the Biden economy, the Biden jobs market, was way worse than markets thought. And that's sort of consistent with the rest of our views that their policies were unwise, and there's a lot of cleaning up to do. And I think that if you look at ISM that just came out, that market participants believe that President Trump is going to be able to turn things around. And with these big downward revisions, we can see that there's actually a lot of work to do. So,
Kevin, that's your opinion on the state of affairs. I want your view on the policy matter. And I want to get a bigger picture view as well, because I think your approach is getting lost in the trade headlines. The fuller approach is getting lost in the trade headlines of the last week or so. Can I ask you how your tax plan might complement the trade effort, how these two things might gel?
Well, it's obviously, President Trump's tax plan working together with congressional leaders. We had the A-team meeting together in the White House yesterday, including meeting with the president and the vice president to talk with the top House members about exactly what they want to see in the reconciliation package and finally the bill. And in politics, there's always going to be a work in progress. But I can tell you that President Trump has assembled the very best possible team to negotiate with Congress and make sure that they can be successful. And you've seen some of the news from that. And I think the headline news is the president has stated, as he always does, exactly what he wants. And that's not like just negotiation. That's what he wants. And the people in the House were able to work with it. And now it looks like there's a lot of positive momentum after they met with the president.
So, Kevin, just going through the list of things that the president wants, and of course you know them well, but for the benefit of our audience that might just be joining us.
Sure.
Ending taxes on tips and overtime, new cuts for Made in America products, extend TCJA from 2017, expand the state and local tax deduction. There's a lot there. One of the offsets was to end the carried interest loophole, which was a little bit of a surprise. There's another offset as well, potentially in the mix. And this is where the trade story fits in. And I'd love your view on things, Kevin. What is the objective of the trade approach? Because in the first term, it was about reciprocity. And the administration at the time, and Larry Kudlow was in your position, made a pretty forceful argument to say, we're doing X and China's not following up. They need to do more. That all made sense. Now it's about national security, the southern border. It's about drugs. It's about potential revenue raising as well. Which one is it, Kevin? Can it be all of the above?
Oh, the bottom line is the first time I ever met the president, right at the beginning of 2017, that one of our first discussions about trade policy was about reciprocity. And so 100%, that's going to be a key factor in President Trump's thinking and his team's workouts from his thinking as we work forward. And when you think about, well, what is reciprocity? How should we think about it? Then a lot of people focus on tariffs, tariffs, tariffs. And if we look at just tariffs, then you'll see that our trading partners tend to have tariffs that are 2 or 3 times higher than our tariffs. And so, like, if we were going to be reciprocal, then they could come down or we could go up, but it would be a lot different trade policy. But the way I like to think about it is just think about the fact that we have a tax system in the U.S. that's fundamentally different than the tax systems everywhere else in the world. And so I had my guys a couple days ago just update the numbers I always look at, and we found that U.S. multinationals had paid foreign governments $370 billion in taxes because of value-added taxes and income taxes in 2023. And foreign multinationals operating in the U.S. paid the U.S. government only $57 billion in taxes. And so they have 3 times the GDP we do, globally. We're about a quarter of GDP. And we're paying $370 billion, and they're paying $57 billion. And that's not reciprocal. That's something fundamentally different. And what President Trump wants us to do is to come up with a really smart program that includes trade policy, tariffs, and revisions to the tax code. And he wants us to make it work so that America's on a level playing field again. And the reason he wants to do that is not because of the numbers, it's because of the people. The people in America who don't have jobs because we're paying $370 billion a year in taxes to foreign governments in order to incent our companies to not create jobs here, but create jobs overseas.
Kevin, you didn't mention Europe, but it sounds like you're talking about Europe. What's the ask of the Europeans?
The president is going to negotiate with the Europeans. He's going to negotiate with everybody. And at the time when he does that, you'll find out what his asks are specifically.
Are some situations more negotiable than others? We've seen already you put the threat on the likes of Canada and Mexico. Mexico provided some concessions. We saw the same thing from Colombia. Is the approach to Europe going to be any different?
I mean, 100% what happened over the last week wasn't a trade war. Why would you have a trade war with your neighbors that you trade with so much? It was a drug war because 90,000 people died of fentanyl because of the fentanyl coming across the borders in Canada and in Mexico. A lot of times the drug from Canada was coming across from the Mexican drug cartels, by the way. And so the Canadians and the Mexicans made a deal with us to make progress on this, because it's absolutely unacceptable that more people die from that poison than from the Vietnam War in 1 year. And so we just had a discussion about how are we going to win the drug war, and that's what happened then. I'm not aware of, nor have I been informed of, massive fentanyl shipments from Europe. And so the discussions we have with Europe will be about other things.
So it sounds like you want to do revenue raising on more tariffs, potentially when it comes to Europe. Does that need to happen before the tax bill, or is the president willing to expand the deficit, Kevin?
The president is negotiating the parameters of the tax bill as we speak with members of Congress, and he's asked the Treasury Secretary and me, the Director of the National Economic Council, to meet regularly with leaders of the House and the Senate and to see what's possible and what's right and good and should happen, and to get them as close to exactly the same thing as possible. And that's what we're going to do. It's,
Kevin, as you know,
bow to you guys.
Republicans in Congress are not on the same page. He spent a lot of time with members of Congress yesterday, but he's going to have dinner this evening with senators. Do you have a sense of what the president prefers at this moment, 1 or 2 bills, when it comes to Congress enacting his legislative agenda?
The president is going to work that out with them, and he's talking to everybody. I know that there are different opinions on the Hill, and we'll see what happens.
You also know, Kevin, that confidence coming into 2025 from corporate America is sky high. Sentiment is really robust, it's strong. You know that, the president does. We all know that here on Wall Street. Is there a risk that you squander that confidence? That confidence doesn't translate into action, into hiring, into CapEx, without clarity on a trade story?
I think that we're a couple weeks in, and we've made an enormous amount of progress. And everywhere I look, people are saying, how could you guys possibly get so much done in such little time? And the thing that I can promise markets and you guys, and you'll probably be back next week with you to talk about more things, that this pace of progress is not going to slow. It's not going to slow at all.
Kevin, stay in touch. Looking forward to covering the next 4 years with you. Thank
Great.
you, sir. Appreciate your time.
Say hi to Mike.
I will do. Kevin Hassett there, the National Economic Council Director, on the latest jobs report, and a little bit of an outlook there on the policy changes you might expect from the incoming administration, the new administration under the President, Donald Trump.